Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, and welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. Good to have you on again. We got a great host today, a great guest, Lou Brown, who we've had on before, and Lou and I have gotten to know each other over the last several months. We've known about each other for years, so it's always a pleasure to do anything I can do with Lou, and we'll jump onto that in a second. Before we do, if I could ask you a favor, if you haven't subscribed, go ahead and subscribe to the podcast. It's on 30 different channels, Stitcher, iTunes, iHeartRadio, you name it. And the good news is we're now being downloaded in 50 different countries. We love the reviews, so if you like what you hear, please feel free to leave a review. There's no way I'll know who you are anyways unless you leave a review. So there's no way I can say thank you in any formal way other than just saying thank you here on the podcast. And by the way, just to remind you, the Global Investor Agent team that we launched last year is now number one by a long shot in the company called EXP that we're in, okay? We are in 25 states. The next closest team has presence in 3 states. And we work with you. We work with investors. I'm an investor too, and I created the team just to service investors. They're all certified. They understand how to find the properties, how to analyze them, and how to negotiate them. So jump on the website, realestatewithgarywilson.com, click on the members area. You can get in for free on the right-hand side if you haven't done it before. And if you're already a member, you log on the left-hand side, you know exactly what to do. But do that, do yourself a favor, get that part of your team built out because it's the most important part of your team. Well, speaking of team members, I want to introduce you to Lou Brown. So Lou, thank you very much for taking your precious time to join us again.
Well, Gary, thank you. You know, I am truly amazed by what you've been able to accomplish and the team that you've got. I love the EXP model. I think it's a great idea for people to get involved in that. So congratulations on that.
Yeah, thank you very much, Lou. And one of the things I wanted to talk about is trust, using trust in investing. I know we touched on it briefly several months ago, and I've got people on my team learning it also because it's a great service to offer the investors. I know my next property, I've already got one trust. I'm buying another one and another trust coming up here down the road. And I want everybody in the listeners to really understand why it's important, how it works, and why it's so important, because it provides so many benefits and eliminates so many headaches like you get with a 1031 exchange. It just doesn't exist, you know?
It's an interesting thing. My journey on trust, I was actually forced into learning the best entity on the planet. And I was forced because I originally bought my first house when I was 18 years old and closed on it when I was right on my birthday at 19. And that was the first house I had ever lived in. And the way I was able to buy that was taking over the existing financing. So back in the day, they had NENQ loans, non-escalating, non-qualifying. For $45, you could step in and take over somebody else's loan. That was fantastic. It was a great way for me to get into real estate. That's how I was able to build a portfolio very quickly in real estate. But unfortunately, in 1982, Congress, in its infinite bought wisdom, right, passed a law called the Garn-St. Germain Federal Depository Institutions Act. Well, what's interesting about that is they put into the law the ability for the banks to put the due upon sale clause in the mortgage. And I know most people know what that is because most mortgages have them today. But it took the banks about 2.5 seconds to put that in the mortgages and, of course, kill off the NENQ world. And I was just getting started in real estate. It was exciting. And they killed my opportunity because I couldn't go to banks and qualify for loans. So I decided to read the law. And sure enough, buried way down deep in the law was an incredible loophole. And I'm sure they created it for themselves, right? The Congress people, because what they put in there is when you place your own property into trust for estate planning purposes, the lender is prohibited from calling the loan due. Well, that was a magnificent learning experience right then, because as soon as I realized that that was possible, I also realized that sellers could place their property into trust for estate planning purposes, and I could purchase the beneficial interest of their trust. And that changed my trajectory. So it caused me to go learn about trusts. And I will tell you that trusts are the most magnificent entity that almost nobody knows anything about. And I'm certain, Gary, that there's a reason for that. You know, the elites keep things for the elites, and they teach the attorneys to have everybody else, the sheeple, do what the sheeple do. And they just say, okay, everybody else is in this world, but there's a certain group of people that are in the trust world. And I discovered that it didn't matter who came into that world. Everybody could use it. Everybody could use it as long as you knew about it. So that's when I started getting deep into trusts.
Yeah. Well, I appreciate that. I'm what's interesting is, I know, I'm a little bit of a nerd. I like to study and learn and read, and I love my history. And for all listeners, if you look at it and look into it, you'll discover that trust law is one of the oldest bodies of law in the human race. It goes back to Old English law, back in the old, feudal days, and landlord. The term landlord goes back several hundred years, and that's when trusts were all started. This goes way, way back. And by the way, every time there's an election, all the politicians stand up and say what they're going to do, how they're going to do it. And of course, one side says, we're going to stick it to the rich guy, we're going to tax the rich guy, and we're going to do this and do that. They've never once in my 58 years ever said, we're going to change the trust laws. It'll never happen.
Well, and there's a good reason for that. Trusts came over on the Mayflower, as you pointed out. In fact, if you go way back, Julius Caesar actually originated the concept of trust. And the idea was, let me give you, Gary, my bag of gold. Here's my bag of gold. I'm going off to fight the Gaelic Wars. And here's my bag of gold. You, Senator Gary, you're going to hold on to this bag of gold for me. And when I come back, you're going to give it back to me if I ask for it back. And that was the concept. And so that's exactly how it works to this day. There's a trustee that basically you deed your property out of your name into the trust name. The trustee has to follow the rules that are written down in the trust document. So the trust document controls the relationship. It controls how the money is spent. It controls how the money is used. And the opportunity is that it takes the asset away from your name, and it puts it in another holding place. So conceptually, if someone were to sue you and in your name, and they were actually to get a big fat multi-million dollar judgment against you, well, it would not attach to these assets over here that are in trust held by someone else. And so the words on the paper do matter. And there are about 30 different kinds of trusts out there, and different trusts do different things. So I decided to focus on a specific kind of trust that kind of gave me my cake so I could eat it too. And I love the concept of a trust called the land trust. And so I became an expert on land trusts, personal property trusts, living trusts, and something I call the elite trust. So those are 4 distinctions, and they do different things, and different people need them for different reasons. But one thing I discovered is everybody could use the land trust. So I said, what's the lowest common denominator? What's something that everybody could learn and apply in their own world, and have their cake and eat it too, get the assets divorced, separated from themselves, but still have control over those assets by having control over the trustee. And that's what the land trust does.
Yeah. Well, I appreciate that. If you could, let's just talk about land trust first. If we have time, we can talk about maybe 1 or 2 of the others. But I know I'm as a side note. I think you mentioned one time you even put like your personal, but like your cars in their own trust, and because it creates such a shield of protection and some other benefits too. But on the land trust, I know some people have heard about them, some people haven't, been around a long time. But would you mind giving an example, maybe like a dentist or any business owner or even a professional teacher, fireman, policeman, who wants to buy a piece of property? What would that look like to them as far as putting that property in a trust?
It's so simple once you have the documents and the tools to work with, because let's say you do your first trust. Well, after that, it just becomes a template. And each time you buy a property, you put it into a separate trust. So it's, to me, it's estate planning as you go. So as you're acquiring properties, you're putting it into a trust. Now, one of the unique things about a land trust is you can name the trust anything you choose. So then you can get creative on naming strategies, such as the Sister Mary Frances Trust, who wants to sue the nuns, right? Or the Native American Youth Trust, right? Who wants to sue the Indians? So there's a different, let's say, message that can go to the market simply by the name of the trust itself. And that is allowed by the land trust. So now you've got some naming strategies. It's not a good idea to put it in your name trust, right? Because that brings it right back to you. But if it's in another trust, which, by the way, it's legitimate, it's real, and it is held by someone else, that's your trustee, under the terms and conditions of that trust agreement. So what a doctor, lawyer, Indian chief, anybody who owns any property in their own name, unfortunately, in our system in the United States of America, it's the worst idea on the planet to keep assets in your own name. And the reason is that it makes you the target. And in America, it's so cheap to file a lawsuit. And once for a couple of $100, literally, you could file a lawsuit against someone else. And now they have to defend. If they don't defend, then the system gives them a default judgment, which means that everything they prayed for in their lawsuit, they actually win because you didn't defend yourself. Well, good grief. What kind of system is that? Now, in 95% of the world, if you sue somebody and you lose, you have to pay your attorney's fees and their attorney's fees too. But that's not true in America. So that's why we have to be smarter here. And the smart thing to do is simply to not own anything in your own name. Now, with that said, the next step is to simply deed out of your name into the trust name. So once you have the documents, which is one of the things I provide in my home study course, then once you have the documents to do it with, it's so cheap. Now, think about an insurance policy for the rest of your life that only costs you $14. So, for example, here in Georgia, it's $10 for the first page. That's the deed page, and $2 for each additional page. So I have an affidavit of trust that's recorded with the deed. Well, that's 3 pages. So now it's $14 to transfer a property from my name into the trust name. And now I don't own the property any longer. And that's the truth. It's now owned by the trust. So that gives you some insight into just how easy it is to do it. It's literally creating the deed and then recording that at the courthouse.
Okay. Yeah. Pretty awesome. When I first learned about trust, I just couldn't grasp the concept. And like, okay, how is this viewed by the government, by the IRS, And they kept saying, well, it's like it's its own entity, And when I started getting in the business and creating businesses, that I realized weren't really that met. In the IRS, if you have a separate business, you have a separate tax ID, and that's looked as a separate entity. In trust, most trusts, at least the ones I've seen, I don't have this. There's no separate ID. It's just a trust document, and the deed is the property resides inside the trust. But as far as taxes go and all that, I still pay my personal tax, 1040, like everybody else. The difference is I don't actually pay anything unless I extract income out of the trust. And I don't know if I'm doing that right, Lou, or from you, but
Well, there are
benefits there, I think. Yeah.
It's an important message that you're giving here. That's important distinction, rather, is that different trusts do different things. So, for example, the land trust is a flow through. So that is viewed by the IRS under 671 through 678 of the tax code. Now, what does that mean? That means it's a grantor trust and it's a flow through to the beneficiary. So in that case, the beneficiary is the one that files the tax return. But another kind of trust that actually provides tax benefits, well, it does file its own tax returns, and it's considered under a different part of the tax code. So there really are distinctions in the type of trust you choose. And anyone who's paying, say, $16,000 or more in taxes, well, they might want to consider the other trust because it has not only privacy, asset protection, and probate avoidance, but it's also got a great thing called tax benefits. And so there's some distinctions in how people choose which trust they choose to use.
Yeah. Well, the basic land trust really, I guess it sounds like it's in its simplest form, it's a form of ownership that does separate you, the person, from direct ownership of the property, which gives you protection. So if somebody decides to slip on the bar of soap and fall and then claim you owe them $10,000.
I like your term "decides to slip on the bar of soap" because there's truth to that. There can be people to decide to cause misery in your life and income to their life. And certainly if it appears on public record that you own nothing, well, to me, that's the first barrier of defense, because if you appear to be broke, who wants to go after a broke person? They know that they're spending a lot of money to achieve what? Nothing, because they end up with a judgment against a broke person. So that is a great strategy. That is a great strategy out there in the world, to appear broke and, frankly, not to have a daggone thing in your name. And I'm talking about your vehicles, your stocks, your bonds, your mutual funds, your bank account, your CDs, your CDs, your mobile homes, your motor homes, your gun collections, literally real estate, everything can be out of your name. And here's what's cool about the land trust is you can create a separate trust for each asset. So that means you have separated and segregated your assets from one another. And that is a powerful thing to do.
Yeah. Well, let's talk about that then. Let's say, Jane Doe is building a portfolio of properties. She's buying them subject to, and she's got cash flow coming in. So the properties are inside the trust. They generate rental income. If we could talk about that for a second. So if she doesn't take it out, if the income stays inside the trust, there's an account, a bank account that goes with the trust to hold, income and pay expenses and things like that. Let's talk about that versus her actually extracting out and pulling out revenue from the income generating properties.
So think about this. This is generally how most of my people get started, is with the land trust and the personal property trust. Now, land trust is only for real estate. So if it has a legal description, then it goes into the land trust. However, if it doesn't have a legal description, then it's going to go into a personal property trust. And like I said before, you can have separate trusts for each thing. So imagine having a management bank account, and that management bank account is in a trust. And so over here in your real estate, rent is being collected by you as the manager, and then you as the manager are depositing that money into a separate bank account that doesn't have that real estate name on it. It has its own name as more like a property management company. It receives the income. It pays all the bills. Whatever's left over, that belongs to the beneficiary, whomever the beneficiary might be. So the beneficiary of the trust might be an LLC. It might be a corporation. It might be a limited partnership. It might be you. So whoever the beneficiary is who gets the leftovers after all the bills are paid from the management bank account. And so that sets it up for a great scenario where, again, it's private. Even the contractors and everybody else don't see who the beneficiary of the trust is. And that's one of the great benefits of the trust, is the privacy that it gives to your financial affairs. Nobody sees who the actual beneficiary is. And by the way, that can change at any time. So given that you've got the privacy aspect, you also can have the estate planning aspect of being able to change beneficial interest, change who the primary beneficiary is, change who the successor beneficiary is. It's just an ongoing process.
Yeah. Well, I tell you what, I love the subject, and my wheels are spinning of all the possibilities here. Showing the trust, that's the beneficial rights that you can sell. So in other words, if you acquired an asset inside your trust, 123 Main Street Property Trust, and you want to, if you weren't in a trust, you would, and for all intents and purposes, sell that property. But here we're not really selling the property. You can sell the beneficiary rights to the trust. That gives that person then the beneficial rights of the property inside the trust. And the trustee can probably stay the same, or even they can assign another trustee. I guess does that all sound?
You put your finger on a really interesting aspect of the trust, and it is a great benefit that once that trust is created, it's similar to an LLC in that you can come in. Let's say that you are buying an up and running business, and it's in an LLC. Well, what you do is buy the LLC that has the up and running business in it. You can do the same thing with a trust. So let's say the land trust, owns a piece of real estate. You can just step in and literally buy the beneficial interest of the trust. Trust is up, it's running, it's on public record, it owns an asset, it's that one house. And now you come in and you purchase that beneficial interest. Well, you can purchase that for $10. You can purchase that for $100,000, $1 million. And what comes with it? The whole thing, the trust and the asset in it.
Right. Now,
guess what? No transfer taxes and all the other typical things that you would pay on a real estate transfer. Well, it's already in there. So that's not being transferred in the typical sense of things. What you're purchasing is personal property. And that's an interesting additional aspect of a land trust, is it converts real estate into personal property interests. So in other words, your interest in the land trust is personal property. You only have an interest in the avails and proceeds, which may flow from the trust. So that means the income, right? And that means also the benefits, the tax benefits, everything that comes as a part of ownership of that as a beneficiary flows through to your personal tax returns. And you don't own the real estate. So if there were any liability associated with that real estate, for example, let's say that you owned a gas station, and the gas station, is there any liability with that? Or a daycare center, or just on and on. Think about limos and everything else. Whatever it is that you might own, well, that has liability attached to it. Now you think about the fact that the asset itself is separated from you as the beneficiary. So there's this line here that the risk is up here and the money is down here. So that creates an opportunity for people to have their cake and eat it too, like I said.
Yeah. So I love this part about trust is you're right. The property stays inside the trust. And here I am saying, yeah, you're right, Luke. but I love the fact that the property didn't actually change hands because it's still in the hands of the trust. Only the beneficiary rights were transferred or sold. So the beneficiary rights is personal property. That would be a taxable event. Like you'd have to pay the IRS, whatever your probably equivalent to your income or tax bracket, whatever it is, I guess. Or
Now, that would be correct. So, in other words, a typical real estate transaction, let's say you bought it for $50,000 and now it's worth $100,000 and you're selling your beneficial interest in the trust. Well, you just had a $50,000 gain and you'd have to pay on that gain, or you could do a 1031 tax deferred exchange. Now, with the other trust that I was telling you about, that's a whole other world. And in that trust, that's not true. You don't even have to do a 1031 tax deferred exchange. So there, again, depending on someone's personal situation, there can be reasons to go one way or the other.
Right. Now, is there a way, or I guess a benefit to, let's say you do sell beneficial rights. Can you, instead of you receiving the money personally, can you direct that money into another trust? And would that postpone the tax burden? Because in any other trust, then you can buy another property.
What happens if you want to postpone the tax burden for, let's say, not a year, not 2 years, not a decade, not 2 decades? How about generations?
Yeah,
that we could actually pass the buck on from generation to generation to generation. Now you're getting into what I call the elite trust.
Okay.
And the elite trust is different than the land trust in that it is its own entity. It is what's called a complex trust. The land trust is a simple trust. The elite trust is a complex trust. So they're two different sides of the coin, right? So over here in the elite world, well, that's where the elites are. That's why I call it the elite trust, because the elites, that's what they do. Think about the Kennedys, the Rockefellers, the big money. What do? They set up a dynasty, and they know that kids are going to get born, kids are going to get married, relationships aren't going to work out. There's going to be divorces. There's going to be car wrecks. There's going to be things happen. And they say to themselves, how do we protect this wealth? The answer is that the trust buys the child's home and lets them live in it. But it doesn't matter who they get married to. It doesn't matter what kind of car accidents they have or anything else that happens. That asset's not owned by that kid. That asset is owned by that trust. Now, the trust can pay the property taxes, the insurance, the gas, the lights. The trust can pay for everything. Kid lives in the house because they're a beneficiary of the trust. And the trust can buy the kid's vehicle. So when you look at generational wealth, there's so many things that can be done to pass the asset down. That is not typically what's done in America. What's done in America is it typically flows down from the parent to the child, and then the child does whatever they do with it. And if they have a divorce, if they have something else happen, well, half of that wealth could disappear very quickly, right? So there's ways that the truly wealthy, the ones that are going to be wealthy, they plan differently for their dynasty and their legacy than the typical American does. Yeah,
I agree. A while back, you mentioned LLCs, and there's how there's some similarities. But can we talk about some of the differences between just a standard LLC, which is for a while what people were doing? Remember in the 90s, it was real big, buy properties in LLC. And I did a bunch of it myself. And, trusts have loomed larger in the last several years than ever before. And partly because of the stuff that Congress wants to pass related to 1031 exchange and raising capital gains and all that. But how about just a simple comparison of LLCs to a simple land trust,
So it's interesting because the LLC is the new kid on the block. Like I said, trusts came over on the Mayflower. So trusts have been here a lot longer than any LLC. Well, LLCs are a creation. It's a creature of the state. So in other words, we're really a country of 50 countries, if you think about it. So these different states have their own legislative abilities, and they create their own rules, their own regulations, and their own incentives for people to do business in their state. And so they'll create certain aspects of a thing called an LLC, and they'll say, okay, well, we got a better LLC over here. Why don't you come over here and give us some of your money? And why don't you create your business over here? Even if your business is in another state, why don't you cite us your business in our state so that we can make some fees and income off of you. Now, with that said, LLCs do provide protection. It's a limited liability company. So it does provide liability protection to who? You. But it doesn't provide liability protection to the assets in it. And this is the misnomer that attorneys don't tell their clients. They say, well, you need an LLC. And let's just use California as an example.
Yeah.
So California has a franchise tax, and this franchise tax applies to, guess what? Corporations and LLCs. And it's $800 per entity. So let's say that you like Lou Brown's idea of putting each property in its own trust, but your attorney said, well, you need an LLC. Forget the trust thing, because he didn't go to school and actually learn about them. So, and he's got LLCs for sale today. So he says, no, well, if you like the idea of putting your businesses, each one of those houses, in a separate trust, well, here's what we do. We just set up a separate LLC for each one. So let's say you got 10 houses and you set up 10 LLCs in California. You just sentenced yourself to an $8,000 bill.
Yep.
Times every year that you hold those properties. Yep. And you still have annual dues, annual fees, and annual tax returns. Now, let's contrast that with my land trust that I've been teaching now since 1986. And we have been doing these things absolutely beautifully. And I have licensees of my system in all 50 states. So think about this. We do things differently. We take those same 10 houses. We have each house in a separate trust. No annual dues, no annual fees, no annual separate tax return. So it all flows through in a land trust. Now you got the distinction here. You're going to be subject to the state laws and all the state rules as it relates to the LLC. With the trust, it's an already established entity, and there's only distinctions of administration from state to state. But all states recognize trusts. Why? Because it's the originator of our country. We are a trust. England, think about the Queen of England. Where did we come from, right? Everything that the Queen has is in trust. If you think about the big families, like I said, everything's in trust. So you start to learn that there are distinctions in how you do business. And so they separate their businesses in that way. And you can have multiple trusts inside of a trust as well. Yeah.
I know that's we should probably have a whole other podcast just on that, because there's a whole body of knowledge here, obviously a whole body of law and a lot to learn. But what I want to ask, Lou, if you don't mind, I know you're super busy, and I know this has been a blessing to have you on here, but how can people get a hold of you? You mentioned you have folks in all the states.
There is a couple of things. Number one, we did a podcast earlier this year on the path to home ownership. So one of the unique things we do is we help people to end up with home ownership regardless of credit or financial background. And I teach people how to build a business doing exactly that. We talked about that on that podcast. Okay. Then you and I did a webinar on trusts. So we can maybe in your comments section refer people to that webinar on trusts, where I had a lot of slides and a lot of details about what to do and how to do it. We could refer people to that. And then the third thing is, of course, anytime people can go to streetsmartinvestor.com. And then the fourth thing I can do is I've got to give. So everybody that would like to have a booklet about trusts and kind of learn more about, I carved out a whole chapter of my book, Buy, Hold, Sell, and I carved it out just on trusts because I think it's one of the most important things you can ever do if you're in real estate, even your own personal residence. But certainly if you have rental properties or you're going to hold properties, gosh, or even flip properties, you need trusts. So I've got a little booklet, and it would be at maximumassetshield.com/book. maximumassetshield.com/book. And that's a free download, or you can pay a couple of dollars and we'll ship you a printed version of it. And that's, you're welcome to enjoy that and learn more about trust. I think personally, it's a gift from God. I know that for a fact that, I was pushed into learning it. I didn't really know what I had at the time that I was learning it. And it blew my mind after I started using it and started seeing the results from it. I said, holy cow, everybody should know about this. This is a suppressed secret that nobody knows about. This is what everybody ought to be doing. Because think about this, trusts avoid probate.
Yeah.
Well, probate is something that we all live at some time or another. If we have parents or grandparents that pass away, we have to deal with their assets and passing them to whomever is supposed to have them. Well, what does that require? Typically an attorney, a judge, a court, and delay and expense. Those things can all be avoided with trust. Because here's what happens when people transfer their asset into trust. Inside the trust document, it actually says who the primary beneficiary is, and when that beneficiary passes away, exactly who's going to get it beyond them. Well, isn't that exactly what the courts and the attorneys and all of that is about? It's already stated inside the trust who's going to get it. So as a result, no delay. It passes instantly. And that asset now can be literally sold the next day for money for the heirs. So there's no attorneys needed. There's no delay needed. Probate is off the table for people that learn about trusts. So I absolutely recommend when they go to streetsmartinvestor.com, click on the tools and click on the information about the land trusts and the personal property trusts, and put that link in there on the webinar that you and I did. That would be a great thing to teach more about what this is and how it works visually so that people can see the slides on it.
Yeah. Well, I'm gonna make sure this was all on the show notes. When the podcast was published. So for everybody listening, I don't normally do this, but I want to offer a personal endorsement for Lou, because I've gotten to know Lou. We've known about each other for years. We actually crossed paths. I mean, literally within days and hours of each other before. So this past winter, I said, I'm in Florida. I've got to go to wherever I was going, Pennsylvania, Virginia, or something like that. I thought I'm just going to drive through Atlanta and see if old Lou would have me in for a chat, and sure enough, he did. So the rest they say is history. So I encourage you, take advantage of this. Go to the website, streetsmartinvestor.com. Okay, go to maximumassetshield.com/book. Get some information there. It doesn't cost you a dime. All it takes is you put one foot in front of the other and get the information, because the world is changing. The real estate industry is changing right in front of our eyes. And this is one safe, secure place to be and hold your properties, your assets, that at least as far as I can tell are not going to be touched, because all the people that make the rules use them themselves.
That is 100% correct, Gary. The rule makers are smart enough to know that all of their assets need to be protected from the public eye and from anybody being able to attack it. I don't know if you saw the article about Kamala Harris, and they kind of called her out because she had all these assets in a deferred trust, a tax deferred trust. They were calling her out on it. I was laughing out loud. I said, that's what they all do. She's not alone. That's what they all do. And, so if you can't beat them, join them. But they have definitely carved out some powerful things that are only known to a select few. So learning these things, like I said, is one of the best things I ever did. I do strongly recommend that every one of you learn everything you can about trusts.
Yeah.
And when you get into using them, you're going to be fascinated just how well they work in your world.
Yeah. Well, remember too, everybody, it really what it comes down to is playing offense and defense. In the first part of my life, I learned how to play offense. I learned how to build wealth and income. Didn't pay a lick of attention to playing defense. I thought, well, I'm doing a good job. My properties are cleaning up the code, all this kind of stuff. And then, boy, all it takes is, I know we got to go here, but I just put in, the local code said you now got to have handrails on any set of steps that's 3 steps or more, not just 4 steps, which was the prior code. So I said, okay, contractors, go around, look at all the front stoops that got, 3 steps and not 4. Sure enough, we had to put up some handrails. So sometimes we had to screw in the concrete and put in bolts and put in some new, fresh, wet concrete to secure everything. Well, sure enough, that night, this lady calls us, says, my daughter grabbed your handrail and it came out and she slipped down the stairs. And they knew we had signs up, do not touch handrail. Didn't matter, So in any case, you've got to learn to play defense and paying attention to this information. And again, I'm not knocking LLCs and all those other things. I've used them too, but this gives you such a sense of security and protects your assets and your wealth and your income from predatory practices that exist in our world today. So don't fall victim to it. Learn how to build wealth and income, learn how to protect it, play some offense and some defense. And then you can start by doing it by going to streetsmartinvestor.com and go from there.
And I leave people with the 4 P's: privacy, protection, probate avoidance, and profits, because you can take over existing financing on real estate only by using trusts. So those are my 4 P's of the benefits of trusts. And really, there's about 30 benefits of trusts once you get into it that you cannot get with any other entity, not a corporation, not an LLC, not a limited partnership. So it's certainly something that once you learn it, it's sort of like you can't unsee it once you've seen it. And once you've grasped it, it's really a lot of fun. So I do teach even a 4-day event on just the topic of trusts. And you can learn more about that at MaximumAssetShield.com as well.
Okay. Well, listen, Lou, I really appreciate you doing this. We'll have you back on again. I know you and I have got some catching up to do also, but thanks again. I think I speak for a lot of people when I say I really appreciate you spending your valuable, precious time with us. And you've been around. You've taught at probably all the places I've taught at, and probably more. And I know how lucky we are to have you on here. So thank you again very much for doing this.
Thank you very much, Gary, for having me, and all your folks. Thank you for exposing me to them. And you guys are in great hands with Gary. He just does amazing things. I hear so many great things from other students of his that we've been able to work with, and just fantastic relationships. So I very much appreciate it.
You're very welcome. I'm glad to do it. I'm glad to serve. And Lord knows I didn't get where I'm at myself. And, I've learn the more that I give, the more I receive. And the people who participate in that abundance mindset know exactly what I'm talking about. So yeah. So God bless you and everybody listening and your families. Make sure you go on and subscribe to the podcast, Massive Passive Cash Flow Podcast, and leave a review. We don't now have two podcasts out there from Lou Brown. So leave a review, and we'll see you on the next podcast. Take care.
Yeah, baby.
Bye-bye.
See you.
Okay.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.